Fair value gaps are one of the most powerful tools smart traders use to pass prop firm challenges and scale up capital. But let's get something straight, not all FVGs are worth trading. If you're trading with a funded account or trying to get funded, precision matters. So in this video, I'm breaking down 7 essential tips that'll show you exactly how to use fair value gaps the right way. Let's get into it. Magnifying glass tilted left first. What is a fair value gap? On a basic level, a fair value gap, or FVG, is the space between the wick of the first candle's high and the wick of the third candle's low in a 3-candle sequence. This gap forms because the market moved so quickly, it didn't offer fair value for both buyers and sellers. For bullish FVGs, it means buyers took control fast, leaving a gap behind. That gap becomes a magnet for price to rebalance before continuing the trend. Bearish FVGs work the same way, just in the opposite direction. If there's no gap between the wicks of candle 1 and 3, that means price is balanced, and there's no trade opportunity using FVG logic. White heavy checkmark tip number 1: only use FVGs that align with order flow. This one's simple but powerful. If price is trending up, only look for bullish FVGs. If it's trending down, stick to bearish FVGs. When passing prop firm challenges, every trade counts. Don't counter trade the trend just because you see a gap. Let structure lead, then use FVGs to enter with high conviction. Warning, tip number 2: avoid FVGs that have already been tapped. An FVG that's been touched or mitigated, even by just a wick, is weakened. The strongest setups come from fresh, untouched FVGs. If you're trading under a drawdown limit or on a strict challenge, this one tip alone can save you from unnecessary losses. Chart decreasing tip number 3: focus on discounted or premium zones. Not all FVGs are equal. Mark the top and bottom of a price swing and draw the 50% midline. In a bullish market, target FVGs below the 50% level. These are in the discount zone. That's where you want to go long. In a bearish trend, target FVGs above the 50% line, the premium zone, for the strongest short opportunities. Trading in the right part of the range makes a huge difference in risk to reward. Stopwatch tip number 4. Combine multiple time frames for precision. Let's say you spot an FVG on the 4-hour chart. Great, but it's a big zone. To tighten your entry, zoom into a lower time frame like the 15-minute, and look for a smaller FVG inside the larger one. This gives you a high confluence entry with tighter stops. Perfect for prop firm traders who need tighter risk control. Candle tip number 5. The third candle is the key. The third candle completes the FVG, but it also tells you a lot. If it closes strong in the same direction as the move, that's a breakaway gap, the kind you want to trade. But if that third candle reverses or closes against the move, that's a rejection gap, and it's better to avoid it. It signals weakness and increases the chance the FVG fails. Droplet tip number 6. Trade FVGs around liquidity events. Here's where the real edge is. Price is always hunting liquidity. Swing highs, swing lows, equal highs, equal lows. When price breaks through liquidity, that's a liquidity run, and the FVG created during that move is usually strong. If price fails to close above a liquidity level and just wicks it, that's a liquidity sweep, and it could signal a reversal. Avoid long entries from FVGs after a failed breakout. For prop traders, this tip helps you avoid buying the top or selling the bottom after liquidity grabs. Prohibited tip number 7. Avoid FVGs during consolidation. Consolidation is where many prop traders lose challenges. FVGs lose reliability when the market's moving sideways. One bullish FVG fails, then a bearish one fails. It's a chop fest. If you see multiple FVGs failing on both sides, don't force trades. Wait for 2 clear FVGs to be respected in one direction. That's your signal that the trend is back, and it's time to get back in the game. Direct hit quick recap for prop traders. Trade with the trend. Use untouched FVGs. Stick to discount/premium zones. Drill down into lower time frames. Watch how the third candle closes. Only trade FVGs that form during liquidity runs. Avoid FVGs in sideways markets. If you're serious about passing prop firm challenges and growing your capital, mastering FVGs will give you a major edge. Smash that like button if you found this helpful, and drop a comment below. What strategy should we break down next for prop firm ask? See you in the next one, and good luck with your next challenge.